Supermarket Income REIT is the only UK specialist REIT investing in the supermarket property sector. We have a portfolio of about £300 million worth of supermarket property, and that's located across the UK. We raised £100 million in our IPO, and we did 2 follow-on equity raises, raising a further £85 million.
So we typically look for 3 key features in our investments. So the first is that they fulfill online grocery. We call those omnichannel stores. The second is that they're top performing stores. And the third is that they're on large, flexible sites.
An omnichannel supermarket is one whereby the customer can go and shop in person in a physical store, but it also fulfills online. That could be online home delivery or click and collect. We're big believers in online growth within the grocery industry, and so we want to invest in that omnichannel store because we believe it's a future-proof investment in terms of how grocery will develop over time.
We're the only team in the market who have a database of all of the leased supermarkets in the UK, and within that we know which ones are the omnichannel supermarkets which will benefit from the growth in online.
We were very pleased to have delivered an 8% total shareholder return in our first year, made up of the 5.5p dividend and 2.5% worth of share price growth. If you look at our portfolio now, we have a very long average unexpired lease term of 19 years. The portfolio experienced an average rental uplift in the first year of 3.6%, so strong rental growth. That gives us the ability to announce a dividend increase as from January's payment. And we've put the dividend up in line with RPI as those RPI linkages feed through. The management team is very experienced within the supermarket real estate sector. We have close relationships and tremendous insight into the operators themselves, and Ben has over 20 years experience and has completed over £4 billion worth of supermarket sale leaseback transactions.
The broader team is extremely well connected with the operators, and as a result we have great knowledge of their strategy and also the store network.
Currently our supermarket assets are very attractively priced, and we only buy supermarkets with very strong tenants on very long leases and with RPI uplifts within that lease agreement. That means we're very confident about the sustainability of our dividend at 5.5p, so much so that we've actually just announced an increase in that dividend as of January next year, in line with RPI. Now, to get an idea for the future model of grocery, you only have to look at what Amazon are up to in the US and what Alibaba are up to in Asia. There is a global convergence on the future model of grocery. Amazon bought Whole Foods and now have an omni-channel focus to their grocery distribution, and Hema are rolling out 2,000 omni-channel grocery stores in China. This global convergence on the omni-channel model gives us a great degree of comfort that we are buying future-proof stores when we invest in these omni-channel stores here in the UK. We're very pleased to be able to deliver an 8% total shareholder return within our first year. I'm also equally pleased to be able to announce a dividend increase as of our January payment in line with RPI due to the linkage to inflation in our leases.
The uncertainty around Brexit is going to be unhelpful to the broader property market. When you add to that the continued disruption of online and non-food, there are going to be continued shockwaves through the property market. However, we're very focused on a non-cyclical, non-discretionary sector, which is grocery, and we benefit from long leases to extremely strong tenants.
Investors in Supermarket Income REIT are typically attracted by the very long-term secure income it offers. We paid a 5.5p dividend, so 5.5% dividend for IPO investors in our first year. It's very difficult to find that level of income without taking more risk in other asset classes. On top of that, we have the potential for capital upside, given the large flexible sites we own. And that inflation linkage embedded in all of our leases means that we have a progressive dividend, which we expect to grow with RPI over the life of the leases.